Gard, Chief Investment Officer at Telarray. After my years working in investment management and financial planning, one of the things I've learned is that there is really, truly tremendous value we can offer to a wide swath of people that might potentially work with an advisor or a firm like ours. I focus on the investment side, so there's a lot of things we do for people that they almost certainly wouldn't do themselves, or even if they knew they should do them, they might not execute them consistently and reliably over the long term the way you need to. The one thing that everybody seems to think, especially when they're new to having an advisor, they seem to think that the one power we have that we don't have is the power to time the market. I can't tell you how many times we've had a new client come on board, or a client with some sort of a windfall like an inheritance or proceeds from some sort of a sale, and they want to talk about when the right time is to invest it. And if you look at history, there's very rare occasions where it actually makes material sense to wait, where it actually would make a difference to wait to invest rather than get in right away. And the one thing that's absolutely for certain is that even if there is a period like that, it's impossible to know it's coming. Right now, I'm not even going to tell you when it is right now that this video is being recorded, because it doesn't matter. Right now, there's a tremendous amount of uncertainty on the horizon, and you could probably guess it's 2022, but there's uncertainty about inflation, Ukraine, the Fed, China. I mean, there's just so many things going on economically, financially, geopolitically, that people want to wait until they get certainty to invest in the market or the right time. But that's always the case. There's never been a time in history where it does seem like the right time to invest. And in fact, during times when there seems to be less geopolitical conflict or economic problems on the horizon, that's when people start saying, well, the market's just playing too high. It can't go up forever. We're due for a recession. We're due for a correction. There was kind of the sentiment around the late teens, 2016, 2017, 2018. There was a period where the VIX was below 10 for a long time, and people thought the VIX would never get above 10. And so anytime you consider investing in the market, there's always reasons that you might not want to at that time. But probably when things look worse, in fact, there's evidence that when consumer confidence is the lowest, that's when the best one-year returns going forward seem to materialize in the markets. So, like I said, we do a tremendous amount of things for our clients, but the one thing we absolutely can't do is time the market. And people will, they don't even believe us. They'll say, that they'll think that we have some sort of inner circle of people that we actually give the good information to. And what's even more unfortunate is some people think if we as advisors can't time the market, then we really don't add a lot of value. And I could dispute that. I could probably go on for an hour just about that. But I assure you, nobody can time the market effectively, and the more somebody tries to convince you that they can, the more you should be skeptical and realize that they're doing something that they're over-promising and going to have to under-deliver on, because it's really difficult. If you think about it, to make a decision not to be in the market, you actually have to be right twice. You have to be invested and decide the market's going to go down and sell, and even if you're right, once the market goes down, you have to be ready to buy at the bottom or near the bottom, because the time it's going to seem least like you want to be back invested is when you're going to have the best returns going forward, most likely. And if you're the type of person that sells and then waits for certainty, well, sometimes the market can go back up past the point you sold at before you feel like you're certain enough to invest. And then you get into a really miserable situation where the market gets above your exit point and you're actually betting against the house. You're hoping that that the economy stumbles, that the stock market falls, and it's just a really unfortunate, bad feeling, bad experience all around that I think a lot of people that get in that situation secretly wish they just never even tried to time the market. So we always tell clients, if they have a big windfall and they're just too uncertain, they can dollar cost average in over a period of months or even a year or two. But in exchange for that, that comfort they get from it, they probably are going to give up on average returns because the market just goes up over time as long as real GDP per capita is growing and there's productivity growth and technology innovations and things like that. The stock market long term is not something that reverts to the mean. It's something that does go up over time. Inflation, in inflationary environments, stocks are one of the best hedges. So you'd actually expect to see higher nominal returns in inflationary times. So the market just plain tends to go up. At least it has historically, and we believe it will in the future. And it's sort of a cliche, but time in the market is much more important than timing the market. So again, I'd love to discuss all the things we can do for you, but I assure you, we and nobody else can effectively time the market. So hope that helps. Let us know if we can help with anything else, and thank you for watching.